This is my second consultation call with Trade Brigade. What's up, guys? Day Trading Knockouts here. This is episode 2, part 5. And in this video of the new series that I'm making, in this video, Trade Brigade covers how Jim Dalton uses market profile and how it can be used properly to fit my strategy and personality market profile. And hopefully, with this video, you guys will be able to figure out how to do it the same for yourself as well. Bang! I was trying to see which way the camera was. I currently use it, me personally. For those of you who don't know, well, not the me personal part, but the market profile. Market profile is a TPO chart that shows 30-minute increments of the market day trading session. So basically, A period is from 9:30 to 10 a.m. Eastern Standard Time. B is from 10 to 10:30 a.m. Eastern Standard Time, et cetera, all the way till the market closes at 4 o'clock p.m. Eastern Standard Time. I currently use it as a very important part of my analysis to really gauge what the market participants are thinking, especially institutions, and how the retail traders are getting screwed over. Jim Dalton is a man who really invented the book and really covers it in Markets and Profile. And he's currently in his 80s right now, and he has an extensive trading career, at least over 50 years. It's got to be. And he's a great mentor and someone who can definitely be of assistance in your career. So, with that being said, don't forget to like and subscribe to Day Trading Knockouts. Now let's get into the video. Peace out, my fellow millionaire day traders.
Okay. And the last two, which I guess, again, is basically the same thing. I think it's better if you share your screen because you don't need to see my screen for this anymore because you would probably want to show your setup and everything. But
okay.
In regards to like when it's the middle of the day, when you're looking at your charts, your market internals and market profile, because like I guess you could just give me, because I've seen your videos where it talks about it. Like, oh, actually, before you go to your screen real quick, like I just want to show this. Like, for example, like I'm pretty sure you're already familiar because you've read Mind Over Markets, I'm assuming, or I don't know, but
most of it, yeah.
Most of it,
I've done my fair share of skimming. I won't lie.
You've done your fair share of skimming?
Yep.
Okay. Well, I'm pretty sure you've heard of the how they talk about the initial balance. The first 30 minutes is important because it can help determine where the market's going to go for the day. And like terms like open drive, open test drive, open auction, acceptance, rejection, all that.
Yep.
So yeah. So like say if I, because I'm trying to view it properly when you take all the context from a longer time frame and everything. Say if you see this right here, right? Where we pretty much did go up for a while. In fact, we closed at the high. What is this, Friday? Yeah.
Yep.
Because we had that slow trend all day. So say if I look at this, this, I guess you could call this an open drive, correct?
Yeah, definitely. The open on Friday was an opening drive. That's usually in the like, let's think about the context of Thursday that we just walked through on the candle chart. And you can even see it off to the left. Notice how A period is just kind of small and condensed. And also it's overlapping with B, C, D, N, like all those other periods. There was no like strong opening drive on the Thursday session. It was really more of a balanced open, right? We know that. We saw that 5-minute balance area form. Whereas on Friday, we immediately push away from the opening print and we don't really revisit it. That's a strong opening drive. So yeah, absolutely.
Yeah. Okay. So basically the question in general is when it comes to both your market profile, your charts and the market internals, what are good, what could help me advance being able to see it unfold before, like, because obviously when you see too much information, you might have missed the trade. What would help me be able to enter in at a more proper time and see it from a technical perspective? Like, okay, yeah, this is more than likely going to happen. So let's get in long or short or whatever.
Sure. So we can use Friday as an example. Friday in particular, it basically closed the gap like instantly on the open. There wasn't much of a gap, but we know that there was a very, very small gap to be filled. We weren't really the idea was not to trade through the gap range, but rather just watch for the structure to potentially repair, aka a quick wick down through the gap and then a reversal. I was personally expecting more of a digestion day, but as soon as that opening drive kind of showed its momentum, that was where I think it was kind of game on and like, okay, the market's clearly going to continue to squeeze on today's session. So the best opportunity to me was really in individual companies. That day I traded Meta and Tesla. Those are the two names that I was really focused on. and Tesla was a great opportunity. So I think combining what was going on in the internals and what was going on with the ES itself was pretty telling. I'll take back the screen for a moment.
Let me stop share. Or I think
I can just capture it.
Yeah.
Did I get it?
Okay. Yeah, you got it.
Cool.
I see your screen.
Awesome.
Real quick, I don't mean to cut you off, but also in the link, whenever you send like in Discord or whatever, can you link about like the SP sectors? Because I don't really pay attention to those. I watch your videos from like the weekend and stuff, and you talk about it, but I don't understand. You have a video on it, right?
I don't have an S&P sector video, unfortunately. No. Maybe it's one I'll make, but yeah, I can send. What can I send you? I'll type up some things and just make some comments about the S&P sectors, how I use them, and what else? I'll send you the most recent weighting of the S&Ps. Yeah, I'll basically just type up some thoughts on how I use them and what I think is important about it.
Okay.
Yeah, so back to Friday, right? This opening drive, again, you can see very, very strong opening 5-minute bar. Once again, there's that little minor lower wick to test the full gap close. And for all intents and purposes, I mean, in a market that is trading, 4,100 points, a 3-tick miss is not, basically the gap is closed, right? We're not calling this an open gap. So gap fills, strong reversal, close at the highs, close at the overnight highs. I mean, everything about this chart is looking strong. This is the tell here. This is what I found most interesting, right? So here we go. You get this opening consolidation phase, right? You take out the high, but you close back inside. Okay, so you should be saying, all right, buyers have failed here. We're going to fall back in. We're going to get that choppy day that everybody was assuming. All right, so what's the short setup? Well, we ask ourselves, if we take out the low of this inverted hammer, technically we should go back to the opening print, right? That's kind of how the setup would work. Buyers failed over the highs. Now we're looking for the shorts to enter under the lows. Does that happen here? Well, we undercut the low, but what happens? We continue to consolidate. And where are we consolidating? That's the most important part. Above the overnight high.
Okay, so, yeah.
Strong opening drive, nice consolidation, failure from the sellers after a fake break in the upward direction. I'm not seeing the obvious short, right? So it's not a long yet, but it's not an obvious short. And then this is the nail in the coffin right here. Why? Well, because we test the equal high, we close back once again inside of the range. Do we even test the low of that bar? Nope. No test of that low, and then a solid green bar brings us back to the high. So if the sellers have failed twice now, and now we're back up at this area, you've got to assume, all right, there's no traction under the lows. The market's trying to break out. Again, you could always ask yourself those two questions. What's the market trying to do? How good of a job is it doing that thing? Well, the market's trying to break out here. It's trying really hard. It's not doing a great job of it because we keep coming back down into this range, but the sellers are also not doing anything impressive. We know we're bullish from a location point of view here. And now that we've got to close back up at these highs, we've actually done the thing. We've closed at this area that's offered previous rejections. Okay, now we know the market's trying to break out. It's doing a better job of trying to do that thing. So longs on the table here. Again, personally, I was trading Tesla, but you could have taken, let's see, where would have setup have been here? I would have looked at possibly long over these highs in here. Reason being is that this red bar, once again, is a test of this area in here. It's also a recognition that sellers tried to offer a pullback. It did not work. It did not go into this range. We close back inside of the green bar technically from here. Then you say, okay, well, if we crack these highs, it's game back on. You could use these highs as well. Either set really works. Then you're long here and other setups unfold. So that's just using the price action. But if you pair this with what was going on in the internals on Friday, this is where I think, the core of your question really also comes to the forefront. Everything was bullish here. I mean, ticks were all above the zero line. This is always going to be your number one. This should be the first thing that you look at. Then you read this in reverse clock, not completely reverse. Yeah, I guess. How would you say? This would
reverse
be
clock, counterclockwise.
counterclockwise. Exactly.
No, it's reverse clockwise. Whatever Trade Brigade says is correct.
Yeah. So yeah, you basically, it goes, always look at price action first from the, this is kind of like, maybe you would consider it an internal. I would say that the internals really start with the tick, but so this is like 1A, this would be 1B, then you want to go 2 and 3 here, right? So tick, as the morning's unfolding, is, everything is above the zero line. All of these tests underneath never find sticking points. Cumulative read is off to the races out of the gates. We know that the advanced decline line is in trend higher zone in between 2000 and 1500. And then these breaths were bullish all morning, right? They were sitting at, they were probably a little weaker, maybe as the early stages of the day unfolded. I think they were around like 3-1s, if I'm not mistaken. Mm-hmm. Doesn't really matter, but they were green across the board, right? And everything about that tells you, okay, not really looking for shorts. They're not rapidly deteriorating. Like on a gap, we look for something to open at 10 and move to like, 2, 3, maybe 4, something like that. That would be deterioration. They didn't open at like a 10, so we didn't really have to worry about that coming down aggressively. Mm-hmm. These never really budged. They held up in trend zone. And again, the tick's all positive. It's a perfect storm for like, okay, longs are on the table. After all the context we just described here as well, it just, to me, everything was pointing at a long. Now, again, I told you I was trading Tesla. If you look at, obviously Tesla, look at the 5-minute chart, but the setup here,
wow,
the setup was quite wonderful. I did not get the whole move. I certainly did not get the whole move. I went from here to like here. So left a lot of money on the table, but it is what it is.
That thing looks really pretty. Wow.
Yeah, this is an example of like a textbook trending type day. This is like a gift from the market,
Yeah. Wow. I don't even I just pay attention to ES. Wow. So
I'm don't change your trading style just because you're like attracted by things like this. But Tesla's setup was the perfect, pullback to VWAP. It was right. Why is this not zooming? Let's try. That's kind of good enough. I'll do this. Yeah, there we go. So like opening drive was higher, continues to hold VWAP in here. To me, the tell was this hammer candle. Again, why? Because we have this pressure cooker top that's forming. We undercut all the lows of the consolidation. Long on the break of this high, it held VWAP. Their sellers did not make anything happen underneath the consolidation lows. And then, I got stopped out kind of in this area on the pullback. I wish I could have held longer, obviously, that was like a big mistake to get out so early, but it is what it is. It's part of trading.
Yeah.
And as you've heard me say time and time again, I'm a bit more conservative. I like to be in and out. I hate holding things for longer than like an hour, 2 hours, whatever, it's just my own psychology. I got to get past that. It's something I'm working on, but anyways, that's like the setup and how I used like the S&P and the internal screen here. All of this stuff, like this doesn't just go away when you're trading something like Tesla. This, of course, is on another screen and you're saying, okay, this is confidence inspiring. This is confidence inspiring. Things look great here. The ES is also holding up. You could swap this for the NQ if you like a little bit more of a tech weighted index. But all of this is like, okay, give me more confidence that Tesla is going to continue higher. That hold of VWAP, beautiful, right? So yeah, I think that kind of touches on the question that you were asking, but
that pretty much answered my question for sure. Yeah.